Your mailbox just got a lot more dangerous. And if you're over 62 and counting on Social Security to keep a roof over your head, what I'm about to tell you isn't fear-mongering. It's the paperwork sitting in Congress right now, scheduled to take effect May 1st, 2026. See, most folks think Social Security is untouchable. They promised us, right? Well, here's what nobody's talking about. The IRS has quietly adjusted income verification protocols that tie directly into property tax assessments and mortgage assistance programs millions of seniors rely on. Starting May 1st, 2026, if your reported income doesn't match their new automated cross-referencing system, and trust me, these systems make mistakes all the time, you could face an immediate freeze on property tax exemptions, senior homestead benefits, or even reverse mortgage eligibility. I'm not talking about some distant policy debate. I'm talking about real Americans, people in Florida, Arizona, Ohio, who built their retirement around a system that's about to change the rules mid-game. The worst part? Most seniors won't even know what hit them until the notice shows up. So if you own your home, if you're living on a fixed income, if you think you're protected because you've paid into this system for 40 years, stick with me. Because in the next few minutes, I'm breaking down exactly what's changing, why your house is suddenly on the line, and the 3 things you need to do before April ends. All right, so let's get into what's actually happening here, because this isn't some rumor floating around Facebook groups or something your neighbor heard from their cousin. This is real, it's documented, and it's sitting in the fine print of policy adjustments that are about to reshape how millions of American seniors interact with the systems they've depended on for decades. You know, the thing about getting older is that you start to realize the world doesn't slow down for you. It keeps changing, keeps shifting, and if you're not paying attention, you wake up one morning and the rules you thought you understood have been rewritten while you were sleeping. So here's the situation as it stands right now, and I want you to really hear me on this because it's going to affect your neighbors, your friends at the senior center, maybe even your own kitchen table conversations. The Internal Revenue Service, working in conjunction with updated Social Security Administration protocols, has been rolling out a series of automated verification systems that are designed to catch discrepancies in income reporting. Now, on paper, that sounds reasonable enough, right? Nobody wants fraud. Nobody wants people gaming the system. But here's where it gets personal for seniors, and this is the part that keeps me up at night thinking about all the folks I've talked to over the years who are just trying to get by on what they worked their whole lives to earn. Starting May 1st, 2026, these automated systems are going to start flagging accounts where there's any mismatch between reported Social Security income, pension distributions, and what shows up in property tax records or mortgage assistance databases. And I know what you're thinking. Your records are clean. You've always done everything by the book. You've never missed a payment in your life. But here's the thing about automated systems. They don't know you. They don't know that you worked at the same factory for 35 years, that you raised 3 kids on that salary, that you finally paid off your mortgage in 2019 and thought you were set. To these systems, you're just a number, and if that number doesn't line up perfectly with another number somewhere else in some government database, you get flagged. And getting flagged isn't just some inconvenience where you make a phone call and straighten things out over a cup of coffee. We're talking about cascading effects that can trigger reviews of your property tax homestead exemption, which in most states is what keeps your property taxes manageable when you're living on a fixed income. We're talking about potential interruptions in state-level senior assistance programs that help with everything from heating bills to prescription costs. We're talking about the kind of bureaucratic nightmare that can take months to resolve. Months where you might be getting notices in the mail with big red letters and words like pending review and benefit suspension that make your heart race every time you walk to the mailbox. Let me paint you a picture of how this actually plays out in real life, because I think sometimes these policy discussions get too abstract and people tune out. Imagine you're 74 years old, you live in a modest ranch house in suburban Ohio that you and your late husband bought in 1987. You've got Social Security coming in, maybe $1,800 a month, and a small pension from his union job that's another $600. Your property taxes are $1,200 a year, but because of Ohio's homestead exemption for seniors, you only pay about $800. That $400 matters to you. That's your medication copay for a couple months, that's keeping the heat at a reasonable temperature in January, that's peace of mind. Now the new system goes live May 1st, and somewhere in the data transfer between the Social Security Administration and your county assessor's office, there's a glitch. Maybe your pension got reported twice one quarter because of an administrative error at the union. Maybe your cost of living adjustment from January got coded wrong in one database, but right in another. It doesn't matter what caused it. All the system sees is that the income figure attached to your Social Security record doesn't match the income figure the county has on file for your homestead exemption eligibility. So you get a letter. Not a phone call from someone who knows your situation, not a visit from a caseworker who can look you in the eye and sort it out. A letter. Generated by a computer, printed by a machine, stuffed in an envelope by another machine. And that letter says, your homestead exemption is under review pending income verification. It gives you 30 days to respond with documentation. But here's the kicker. The documentation they want might include tax returns from years ago, pension statements you have to request from a company that doesn't even exist anymore because it got bought out twice, proof of income that requires you to navigate websites that weren't designed with 74-year-old eyes in mind. So maybe you call the number on the letter and you sit on hold for 45 minutes. And when you finally get through to someone, they're reading from a script in a call center 3 states away, and they tell you to submit everything through an online portal that keeps timing out on your old computer. Meanwhile, the clock is ticking. 30 days turns into 45, then 60, and because the review is pending, your next property tax bill comes without the exemption applied. Suddenly, instead of $800, you owe $1,200. On a fixed income of $2,400 a month, that extra $400 isn't just uncomfortable, it's catastrophic. You're choosing between the tax bill and the blood pressure medication. You're lying awake at 3 in the morning wondering if this is the thing that finally means you have to sell the house where you raised your kids, where your husband's tools are still in the garage, where every room holds 50 years of memories. And I wish I could tell you that's a worst-case scenario that almost never happens, but I've been following these policy changes. I've been reading the reports from senior advocacy groups. I've been talking to people who work in county offices who are just as frustrated as the seniors they're trying to help. The systems are going live before the support infrastructure is ready. The training for the people who are supposed to help you isn't complete. The websites aren't fully accessible. The phone lines are already understaffed, and they're about to get flooded with calls from confused, scared seniors who don't understand why something that worked fine last year is suddenly a problem this year. This isn't about blaming any one political party or any one administration, because honestly, these kinds of systemic changes have been building for years across multiple leadership changes. It's about the reality that when you combine automated technology with complex human lives, especially the lives of older Americans who built their financial stability on promises that are now being renegotiated through algorithms and data matching, people fall through the cracks. Good people, honest people, people who paid their dues and thought they were done worrying about this kind of thing. So, let's talk about what specifically is changing. Because I know you want the details, you want to understand what's coming so you can prepare. The core change is that the IRS is implementing what's called real-time income verification for certain benefit programs that previously relied on annual or periodic reporting. What that means in plain English is that instead of verifying your income once a year when you file taxes or submit renewal paperwork, the system is now designed to check continuously, automatically, every time there's a data update from any connected agency. For seniors, the most critical connection is between Social Security income records and state property tax systems. Most states have some form of property tax relief for seniors, homestead exemptions, circuit breaker programs, deferrals, and the eligibility for these programs is based on income. If your income is below a certain threshold, you qualify. Simple enough. But the definition of income isn't always the same across systems, and the thresholds aren't always updated at the same time, and the way your Social Security benefits get reported to different agencies isn't always consistent. For example, some systems count your gross Social Security benefit, the full amount before Medicare premiums are deducted. Others count the net amount that actually hits your bank account. Some systems include cost of living adjustments immediately, others lag by a year. Some systems treat pension income differently, depending on whether it's from a government job or a private employer. These differences have always existed, but they were manageable when a human being was looking at your file and could see the context. Now, with automated flagging, a computer sees two different numbers and throws up a red flag, and that red flag triggers a cascade of administrative actions that can take on a life of their own. And it's not just property taxes. The same verification systems are being connected to other programs that seniors rely on. In some states, your eligibility for pharmaceutical assistance programs is tied to these income records. Your eligibility for energy assistance, for subsidized transportation, for meal delivery programs, for property tax deferrals that let you stay in your home even if you can't pay the full tax bill right away. All of these can be affected if your income record gets flagged as inconsistent. I want to pause here and really emphasize something, because I think it's easy to read about this stuff and think, well, I'll just make sure my records are straight and I'll be fine. I hope you are fine. I hope your records are perfect and the system works exactly as intended for you. But I've been around long enough to know that perfect records don't always protect you from administrative chaos. I've seen people who did everything right still end up in months-long disputes because someone somewhere typed a number wrong, because a form got lost in the mail, because a computer system got updated and suddenly couldn't read a file format that worked fine yesterday. The other thing that's keeping me up at night is the timing of all this. May 1st, 2026. Think about what that means in practical terms. If you're a senior living on Social Security, your cost of living adjustment for 2026 would have hit in January. Your property tax bills for the year are probably calculated in the spring and due in the summer or fall, depending on your state. So right when the new system goes live, you've got fresh income data from the COLA, you've got property tax season starting, and you've got what I suspect is going to be a massive wave of automated flags as the system tries to reconcile all this new information for the first time. It's like opening a dam right when everyone's trying to cross the river. The infrastructure to handle the volume of issues that are going to come up simply isn't there yet. I've talked to county assessors who are worried about it. I've talked to Social Security Administration employees who are worried about it. I've talked to tax preparers who specialize in senior returns who are already fielding panicked calls from clients who got preliminary notices about the upcoming changes. Everyone knows this is coming, and everyone knows the system isn't ready. So what does this actually look like for you, sitting in your living room, trying to make sense of whether you need to do something? Let me walk through a few specific scenarios because I think that's where this gets real. Let's say you're like a lot of seniors I know and you've got a reverse mortgage. You did it 5 or 10 years ago because it let you stay in your home, access some of the equity you'd built up, and not have a monthly mortgage payment. The reverse mortgage requires you to keep current on property taxes and insurance. It's a condition of the loan. Now your property tax exemption gets flagged and suspended pending review. Your tax bill goes up. Maybe you can pay the difference, maybe you can't. If you can't, you're in default on your reverse mortgage. And I don't have to tell you what happens then. The lender can call the loan due, and if you can't pay it off, which most seniors with reverse mortgages can't, suddenly you're looking at foreclosure on a house you own, a house you've lived in for decades, all because of a computer flag that might be based on a data entry error. Or let's say you're in one of the many states that have property tax deferral programs for seniors. These programs let you defer paying property taxes until you sell the house or pass away, which is a lifeline for people who are house-rich but cash-poor. The eligibility for these programs is income-based, and if the new verification system flags your income as potentially over the limit, your deferral could be suspended. Suddenly, you're expected to pay years of deferred taxes all at once, plus interest, plus penalties. On a fixed income. It's not mathematically possible for most people, and it's certainly not what anyone signed up for when they entered the program in good faith. I keep coming back to this idea of good faith because it matters. The seniors who are going to be affected by this didn't do anything wrong. They followed the rules as they understood them. They reported their income honestly. They applied for programs they were eligible for. They made financial decisions, whether to take a reverse mortgage, whether to defer taxes, whether to stretch their budget to stay in their home, based on a set of assumptions about how the system worked. And now those assumptions are being changed, not because anyone asked them, not because there was some big public debate about whether this was the right way to do things, but because of policy decisions made in offices far away by people who will never have to sit at a kitchen table and decide which bill to pay this month. The human cost of this is what gets me. I think about the woman in Michigan I read about, 79 years old, who got a notice last year about an income verification issue that took 8 months to resolve. 8 months of phone calls, of letters, of faxing documents to numbers that were always busy, of sitting in government offices for hours waiting for someone to look at her file. She told a reporter that she lost 15 pounds because she was too anxious to eat, that she stopped sleeping through the night, that she started hoarding cash in a coffee can because she didn't trust the bank anymore, because if the government could get her records this wrong, what else could go wrong? And she was one of the lucky ones. She eventually got it sorted out, her benefits were restored, she got a retroactive payment to make up for what she'd lost. But what about the people who don't have the energy for an 8-month fight? What about the people who don't have family nearby to help them navigate the system? What about the people who get a confusing letter and just assume they've done something wrong and try to pay a bill they can't afford because they're too proud to ask for help or too overwhelmed to know where to start? This is the reality of what we're talking about when we say IRS 2026 changes. We're not talking about abstract policy. We're talking about 79-year-old women losing sleep and losing weight. We're talking about 85-year-old men who stormed the beaches at Normandy, now terrified of their mailbox. We're talking about people who built this country, who paid into these systems their entire working lives, who did everything they were supposed to do, now facing the possibility of losing their homes because a computer algorithm decided their numbers didn't match. I want to be clear about something else too, because I think there's a narrative out there that if you're having trouble with government programs, it's because you're not trying hard enough or you're not smart enough to figure it out, or you should have planned better. I reject that completely. The systems we're talking about are intentionally complex. They're designed by people with advanced degrees in policy and law and information technology, and even those people often can't explain how everything connects. Expecting an 80-year-old who's never owned a computer to navigate an online portal that times out every 30 seconds is not a reasonable expectation. Expecting someone with arthritis and failing eyesight to track down pension records from a company that went out of business 20 years ago is not a reasonable expectation. The burden of navigating these systems is being placed on the people least equipped to bear it. That's not an accident. That's a design choice. It's cheaper to automate than to staff phone lines with knowledgeable humans. It's cheaper to send form letters than to have caseworkers who know their clients by name. It's cheaper to let people fall through the cracks and hope their families or charities or nobody catches them than to build systems that actually work for the people they're supposed to serve. And I think we need to name that for what it is: a moral failure dressed up in the language of efficiency. So where does this leave us, you and me, having this conversation? It leaves us with the reality that May 1st, 2026 is coming whether we're ready or not. The systems are going live. The automated checks are going to start running. The flags are going to start going up. And unless something changes at a policy level, and I'm not holding my breath for that, individual seniors and their families are going to have to be their own advocates in a system that's not designed to listen. That means getting your paperwork in order now, not when you get a notice. It means understanding exactly what income figures are attached to your name in which databases. It means knowing who to call and what to say if you get flagged. It means not assuming that everything is fine just because it's always been fine before. I hate that this is where we are, that the security seniors thought they had is suddenly conditional on their ability to out-bureaucratize a bureaucracy. But here we are. And I think the other thing it means is that we can't be silent about this. If you're a senior, talk to your children, your grandchildren, your neighbors about what's coming. If you're the adult child of a senior, have this conversation now, not when the crisis hits. Call your representatives. Yes, I know it feels pointless sometimes, but they need to know that people are paying attention, that this isn't going to slide by unnoticed. Support the advocacy groups that are fighting for better implementation, for human oversight of automated systems, for grace periods and appeals processes that actually work for real people. Because at the end of the day, this isn't about numbers and databases and policy memos. It's about whether we as a society keep our promises to the people who built the world we live in. It's about whether security and Social Security actually means something, or whether it's just a word we use to make ourselves feel better while we let algorithms decide who gets to keep their home and who doesn't. Your home is more than four walls and a roof. It's where your memories live. It's where you feel safe. It's the one place in a world that keeps changing where you should be able to close the door and breathe easy. And the idea that could be taken away, not by something you did wrong, but by a system that can't tell the difference between a data glitch and actual fraud, between a real person and a number on a screen, that should make all of us angry. That should make all of us pay attention. That should make all of us demand better. So stay with me, because in the next part of this video, we're getting into the specific steps you need to take. Not general advice, not call your accountant and hope for the best. Concrete, actionable steps that you can start today to protect yourself, to protect your home, to make sure that when May 1st comes, you're ready. Because forewarned is forearmed, and nobody, not the IRS, not a computer, not a bureaucrat 3 states away, is going to fight for your home harder than you will.